for that, Karan. Let me bring on board both Kunal Bothra and Aditya Shah. Aditya Shah from Hercules Advisors joining us as well this afternoon. Kunal, let me come to you first. Aditya, good seeing you. Kunal, first to you. With regard to levels on the Nifty, what is it that you're looking out for? We've held in around the 24K mark, right? So it's not been as bad as one would have penciled in. But what's the take? What next? What's in store for the week?
Yeah, it's been a weak day for the markets without any doubt. We've held on to the Nifty below the 24,000 mark, and now we are precariously close towards that 23,750 levels, which I highlighted in the morning on the spot basis. This is a very, very important and crucial support. In fact, intraday, the Nifty came very close towards that 23,750 mark on the spot levels, but we bounced back on an intraday basis. However, I think in the end, we are coming back again to that 23,750 levels for the indices. So this becomes a very important litmus test for the markets. But the mood of the market is a lot more somber because of the way the sector breadth has behaved. Large cap names are the ones which are at the heat of selling pressure. There was an intraday recovery for a few large cap stocks, but that was just momentary because you've seen many of the other large cap names, Reliance, SBI, L&T, etc. They're the ones which are taking a cut for themselves. So the mood of the market looks to be a little somber, but we'll wait for that break below that 23,750 mark before we expect the markets to go into a turnaround.
Okay, so 23,750 on the lower side is going to be very important to watch out for. Kunal, before I come to you for your stock recommendations, let's also go to Aditya. Aditya, hi, good afternoon and good to be chatting with you. Give us a sense of how you've read the market move today, because for the better part of the day, you had pharma, FMCG and IT. At least these three segments were doing really well. And now there is a little bit of a cooling off there too, with pharma and FMCG still in the green, but IT has given up all of its gains and now moved into the red. How are you reading the market in terms of how the defensives have been acting versus the intense pressure that we've been seeing on something like a PSU banks or a realty in today's trade?
So it is very obvious the market sees no resolution to the Middle East crisis. US and Iran have been going back and forth, and that is why the market is really correcting per se. On top of it, whatever guidance our Honorable Prime Minister has given, it basically seems to suggest that slowdown in consumption is what is the near-term solution to all the problems regarding the fuel price increase that is really happening. So from my perspective, near term for the market will be very range bound. Longer term, this correction would be a good opportunity to enter into many sectors. For example, SBI is seeing a correction. Based on the numbers that I see, there's nothing to complain about on the numbers as such. So from my perspective, the correction could be a good opportunity to go into some of the good stocks. Near term, the market will remain range bound.
Gold stocks now, Aditya, is that what you're signaling? Is this a good time?
Absolutely not. The gold stocks continue to remain really very expensive. I've been flagging this over the last 1 year. High gold prices is detrimental to the volume growth. Now with the Prime Minister asking Indian citizens to check the gold consumption, obviously if there is a time correction in the stock in the gold prices, these companies trading at about 60, 70, 80 times price to earnings multiple will continue to really struggle. So per se, I'm negative on the entire gold jewellery companies as well as the third party vendors of these companies per se. You have to be really very careful. This correction is just the start. There's a lot more correction that needs to happen.
Okay, so that's on some of the gold counters that, of course, we're seeing immense pressure on some of those names today, cuts anywhere between 5 and 9%. Kunal, quickly, let's get your views out of the way, and then I'm going to take your chart check on some of these names like a Titan, like a Kalyan. We'll talk about that. But amid a market like this overall, any stocks that are at an attractive, fresh entry point right now?
Yeah, there are two of them. HDFC Life is apparently one of the stocks which has
gold and silver imports are concerned.
Okay, so that's the take coming in with regard to gold and silver and everything that's playing out. Some huge knocks on stock prices. In fact, let me pull out a few. Senco Gold is down nearly 9% at this point. Titan down nearly 7%. Goldium International down around 5-ish. Thangamayal also seeing some bit of pressure. So you're seeing pressure across the board where jewellery stocks are concerned. We've tried to cover that the best we can. In fact, Even gold lenders are seeing pressure. Manappuram is down 3%, for example. Muthoot also seeing a bit of pressure. CSB Bank, for example, is down 3%. Those are just some of the names which come to mind when it comes to gold financiers, and you're seeing those knocks on those stocks as well. Now, let me switch focus though. Try and get a sense with regard to result reactions as to what's played out. Aditya Shah joining us, or rather still with us. Aditya, some of the cap good names and ABB and the likes also taking a knock, given ABB's numbers were far weaker than expected. What's your reading of the numbers and the commentary? Do you believe that a comeback of sorts is possible? At least the management seems to think so.
So cap goods, I obviously expect all the cap goods companies also to report a weakest set of numbers. In my view, L&T's numbers were also not that great. Of course, these companies will continue to face disruption as this consequences of the war continues to move on, and this supply chain disruption. So from my perspective, this is the place where any short-term correction, any short-term blip in the in the valuation could be an opportunity to add. However, I will not want to add any cap good stock which has a multiple higher than 25, 20, 25 or max 30. That is where you have to be really very careful with the valuation of all of these companies. But over a longer period of time, let's say 3 to 5 years, I'm positive on the cap goods area.
I wonder if there are any stocks, Aditya, which are trading at 25, 30 times cap goods exposure related. It's tough to find, but yes, I mean, a meaningful correction could cause that. Kunal, with regard to charts, how is ABB looking, and any other cap good names that you would likely look at?
See, the sector overall largely, I think, looks to be stronger, at least more resilient.
Play the theme with regard to financialization of savings. Would you play it through? Would you play it through something like a prudent corporate? Again, the numbers were very, very healthy. Would you play it through the AMCs? Would you play it through CAMs and CDSL and the like? How would you play it?
Gosh, everything is expensive here. I would always look at mutual funds. Mutual funds also, as a percentage of their AUM, continue to remain extremely expensive. Something like an HDFC mutual fund is really very expensive. Or if you look at Nippon, the Nippon stock has gone from 300 to about 1100 in a matter of just 2 to 3 years. So from my perspective, everything is expensive, but I would look at mutual funds as they are a secular theme, and inflows into the mutual fund will continue as time really goes on. So mutual fund is one of my top picks.
Okay. Give us your take, Kunal, with regard to some of these AMC stocks. What's your take there?
See, I think the only chart which right now I think looks very attractive is ICICI AMC. A limited chart history, of course, for the past few months only. But then I think at 3,000, 3,200, there are two things which are happening for ICICI AMC as a chart. One is that after this recent rally from the March lows, the stock has come back towards a 50 to 61% retracement support, which I think is considered to be a very strong support zone for the stock price, where we eventually see a bounce back or maybe a resumption of the trend in many cases. And on the other hand, today's candlestick pattern for ICICI AMC indicates a strong bullish hammer formation. Now, this is a very interesting chart because this also seals in that we are looking at a prospect where the stock would take support at this 3,200 levels and see a decent bounce back over the next couple of days. If volumes support, then I believe that the bounce back could be a lot more stronger and durable for the stock. So over the next couple of days, expecting ICICI AMC to see certain amount of a bounce back, 3,300, 3,400 could be a potential target range in that sense.
Okay. Aditya, you track the banking sector closely. SBI down nearly 10% now in the last couple of trading sessions. Good opportunity to buy.
Yes, so stock still trades at about 1.7 times. About time when I would try to start to make positions in a staggered manner. I don't think there was any negative surprise in the result. Asset quality, a little bit of slippage increase was there. Of course, if the bank is going to about 10%, a little bit of slippage here and there would be there. So from my perspective, the bank is strongly positioned to have a long-term good deposit growth and loan growth with good asset quality. So from my perspective, I will start to look at SBI in a staggered manner now.
PSU banks, Kunal, and SBI.